You're really, doing a turnaround at Zurich, so we need to talk on that. But first of all, can you just mention your exposure? How much is your exposure to Italian BTPs?
Our exposure to Italian BTP at Zurich is fairly limited. That's a consequence not of financial choices, but of the unfortunate fact that our market share in Italy is now bigger than 3% of the market. So the exposure is really quite irrelevant. However, I remain fairly optimistic on the economic improvement of Italy. Italy has been improving on GDP over the last 2 years. This year is going to be another strong year, and this is what really matters. The rest is political changes and political turmoil.
Okay, if you look at the kind of the yields in fixed income, does it push you towards investing in other areas?
Not really, not really. Again, we can react in such a short amount of time to markets. Our view is unchanged. The view is that equities will do quite well through 2018. We think that in Europe and in US, the rates will go up, which will put some pressures on the values of the debt. And we've been preparing for this for quite a long time, and we haven't changed the view because of the last few days' events.
I mean, what does it mean for ECB policy? I mean, it goes back to, I guess, what you do best, and I remember our great interviews also when you were at Generali, is trying to figure out what the politics in Italy means, I guess, for European growth in general, and therefore what it means for central bank policy, which therefore impacts your portfolios.
I think ECB has to continue doing what they plan to do, which is moving into tapering and getting out of the QE support. We need to see, and we need to get back to a normal state of the economy. QE has done extremely good to the stability of Europe, but has also changed the underlying dynamics of the markets, and ECB is planning to reduce it progressively and then stop it, and I think they should just continue doing that.
Mr. Greco, good morning. When you were at Rochester years ago, I don't know if you studied with a wonderful Carl Brunner, the giant of Rochester economics, but Mario Greco, Carl Brunner would have told you and me and Alan Meltzer that you have to clear markets. I see no indication through 10 years that there's a real desire to clear the financial system of Europe like we did in America. Are you optimistic that Europe can clear the system, whether it's Italy, whether it's Greece, or frankly, whether it's some of the German issues as well? Where's the ability to clear the system a la Friedrich Hayek?
I did study with Carl Brunner, and I'm glad you remember him because he was a great economist. Yeah, I'm optimistic. I think Europe is going to get there. Europe has a different speed, has always had that. But it moves. It moves at a slow motion speed compared to US and compared to some other markets. But that's about Europe, right? Where things have to be negotiated and discussed with lots of countries, and where nothing happens as fast as maybe in Asia. But yes, it is moving and will keep moving, and I'm very optimistic that it will get sorted out.
Does that moving and that slow motion pace within the political populism we've been covering, does it include synergy, mergers and acquisitions, either on an intra-country basis or on an inter-regional basis?
Yeah, there is a lot of noise or talks about it. I mean, for Zurich, really, we said it 2 years ago. We do have a strategy, and the strategy is to follow the industry transformation and actually lead the industry transformation and become consumer-oriented, become the best customer-oriented company in our industry. In order to do that, mergers, M&A activity is not really a priority for us. So we are doing some targeted, focused M&A transaction, and we will continue doing that. But all we do is in-country transactions where we can strengthen our strengths in each given country, as we did in Australia, as we did in Argentina, as we did in US a year ago. And we'll stick to that, and we will maintain our discipline in our focus on that.
But overall, does the European insurance sector need consolidation?
I don't think so, because we are in the middle of fundamental industry transformation, where consolidation doesn't solve the issues and doesn't make it easier for any of us to confront the issues of the transformation. The transformation is driven by consumers and by technology. And the size of the company doesn't really matter, at least for companies as ourselves. What we have to do is, without distractions, in the shorter possible amount of time, get ready to serve the customers with the new technologies as the customers expect us to do. Everything else is a pure distraction and doesn't help us at all. But this works if you have a strategy and if you have a plan to optimize. If you don't, then yes, I mean, M&A, as always happened in the past, is a nice way to push things forward and have shareholders forgetting about the fact that you don't have a strategy and that you don't have a plan to improve.